Good afternoon. It's Friday afternoon, the 3rd of November, 2023. I'm going to do a market report after a very strong week. What I want to do this week is I'm going to do something different. But while I'm doing this, what I'm going to do is open up HGSI, going to go under update, and I still have my thinkorswim open, so I'm going to update and include the intraday data. Now I'll be able to look at some charts and so on, everything other than the NASDAQ Composite, which we need the end of day data for to get a decent chart on that. But anyway, there's plenty of things to look at. So I'm going to start this while I'm talking or introducing this video. So what it's doing, it's updating the fundamentals, and it's going to go in and pull out the intraday data from thinkorswim. So this is my market report, November 3rd, 2023. I'm going to get rid of some of this stuff here. Hope you don't mind. Okay, I'm going to use HGSI market charts for analysis of money flow in and out. That's essentially what I'm talking about here. Now, standard risk disclaimer: any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. You can get a free 30-day trial of HGSI by going to highgrowthstock.com. Now I'm going to close this, and I'm going to open up a copy of OneNote. Every day, every morning when I get up early and I send this chart out, I want to make this full screen, I save it in here so I can go back and review my work. Now the date on this is October 30th. I date it the morning that I'm doing it, so it's data from the prior day, or the 27th. So this is from Friday. Now, when I go back and look at these, I notice that I have some typos in here. You'll just have to overlook that. But let's see what I was thinking on Monday morning after Friday. Friday's candle closed as an inside day on light volume. You can see the volume was very light. I'll bring up another arrow here. So you can see that was very light. This suggests that selling pressure was subsiding because the volume was so light. I mean, this had been falling sharply, and then we suddenly have an inside day. An inside day is this candle's inside the prior day's candle. Internals were 2-to-1 negative. There's no question that most stocks are oversold and a rebound could be imminent. I didn't realize what kind of a rebound we'd have. Stock futures are positive this morning. If they hold, we will have an opening rally. But the daily close is what counts, not the open. So let's just take a look at this. I'm going to go a little bit further down here, and let's see what the... Oh, that's way too big. I need to... That'll go away. I want to point out the marine shipping. Marine shipping has been coming up for weeks. So look at that, 14. This would have been last Friday. Marine shipping, oil and gas services, and equipment application software. But the one that really stands out is marine shipping. This is to the upside. Here's money flow going out. Renewable energy equipment is notable. Okay, you can see renewable energy equipment was weak, healthcare supplies, and so on. But the strength was certainly up here in marine shipping. So let's go on to the next day. So this would have been Tuesday morning. Commenting on Monday, the NASDAQ Composite gapped open yesterday with very strong internals, then faded before rebounding to close up 1.2% for the day. You can see the gap open, and then it moved up, and then it pulled back a little bit. Volume was still very light. Let's see. The enthusiasm based on volume was not there. Banks and insurance were the leading groups. Semiconductors and renewable energy stocks were weak. So I'm going to scroll down a little bit and let's see if that's true. So you can see the banks, biotech, PC insurance, and so on. But when I go down to money flow out, you can see what was weak. The semiconductors and renewable energy equipment were the primary groups. Going on down to the next day, so this would have represented on Tuesday or Halloween. You can see that the index was below this support area. It was another late, it says late volume. It should have been light volume day for the NASDAQ. The index traded in a wide range but managed to close near the high of the day. Internals were around 3-2 positive as October ended with a monthly loss. Stock futures are flat this morning but have reversed from being negative earlier. The market seems to be in a holding pattern waiting for the Fed decision this afternoon. The last 2 days have been encouraging with 2 white candles and yesterday's closing price near the high. So you can see it closed near the high, opened here, traded down to here, and then closed near the high. Volume was light once again, but you can see that here's what I want. The internals right here were positive with the green bar above the red bar. Okay, moving on down to this is data from the first, and get this up here. The comp gapped open, meandered much of the day before closing up 1.6% at 94.45% of its daily range. Strong day. And a VP effort to rise flag was generated in spite of the low volume. It's low volume when it's below the blue line because that's a 90-day moving average volume, which is used for the VPA flags. The internals were flat. You can see there just wasn't much excitement here as far as the broadness of the market, but this strong gap up and a strong close still managed to generate an effort to rise. I said I would like to see this rally broaden out on heavier volume, but momentum in the short term is up. Obviously, it was up. We've had 3 white candles here. It should have been NASDAQ futures are up over 1% this morning as I write this. Now, scrolling down here, here's what I want to point out. Marine shipping again. If you go back, if you look at the files I send out, you'll see the marine shipping has been coming up quite often. So what's on the weak side here? Casinos and gaming, application software, and so on. But this really gives us insight into the prior day's market. And then finally, this is what I wrote this morning. The comp gapped open 1.25% and closed up 1.8%. So you can see the opening gap. Clear up here, traded down a bit, closed at the high yesterday. The question remains, is this the beginning of a major rally or is it just another counter trend rally? For now, my indicators are confirming a rally, but we have seen 2 failures this year after strong moves up, and right here and right here. In the short term, the indexes seem to be overbought. Futures are down slightly this morning. So scroll down here. Now, I don't see marine shipping here today. It's not showing up. But where was the strength? Oil and gas services and equipment yesterday, but I think those were weak today. Internet-based services, application software, aircraft and parts, and so on. Semiconductor devices. I said earlier that it's pretty hard to have a strong rally without the semiconductors. and they showed up yesterday. Okay, now let me get this out of the way. You can see the data's been updated. Now I want to go in and deselect that. I update Metastock files too because I still use Amy Broker occasionally to look at charts. So the data has been updated. Now I'm sure all the indexes have been built already. When I did that update, I know they have. So I'm just going to go in here and go to the major indexes and sectors. And I'll take my filter off. I'm going to click through here to the warehouse view. I'm going to change resolution on this screen so you can see it better. So I'm going to pause here. Okay, you can see that it enlarged everything. Now I'm going to go into top-down scorecard views for HGSI index analysis. We'll just go to the top number 1, top-down percentage price change, 1 day. Now remember that I use market cap weighting. And, well, for those of you who may not know, under preferences, global index options, I use 104 weeks rather than 52 so I can get a longer look at the market. I use market value weighting rather than average or price weighted or equal dollar weighting. I just use this because it puts more emphasis on the larger cap stocks. I'm going to cancel this so I don't have to rebuild everything. Okay, so using those settings, this is what we see. Now, sorting on the percentage price change, the small cap index was up 2.4% today. But remember, it's my weighting. It's not equal dollar weighting. So 2.4% for the small caps today, beginning of the week 6.1, 5 days. This goes back to last Friday. This is Monday morning. So you can see that it's been a huge week. Now, the SOX semiconductors, based upon my weighting, were up 7.4% from Monday morning, or same amount going back to last Friday. So you can see how strong this market was this week. It just took off, and these are the days since a crossover. Remember I said that the market needed the semiconductors to participate. Well, they crossed over 3 days ago. 0 is the crossover day. So I'll just bring a chart up here, slip it in there. This is a weekly chart. I need a daily chart. And, well, let's go to chart number 2, which actually has the crossover day on it. I'm going to move down to what I call my 2C chart. And the reason I do this is because I switched the 3-6 crossover here so we can see this. I can expand this window. So here's your crossover day on the 3 crossing the 6. You can see that the momentum increased greatly because this histogram bar moved up sharply as the 3 moved away from the 6. But here's your crossover day, and that happened on the same day that there was an effort to rise. But look at these VPA flags that were coming in. Strength seen returning after a downtrend. Same thing next day. And then here's a confirmation of that strength with the effort to rise. So let's just look down this list, or I'm going to look down this list and look at all the groups that crossed over either on that same day or prior to that. Utilities crossed over 8 days ago. So here's your crossover. Clear back here on the utilities. The VPOC crossed over 8 days ago. The 3 crossed the 6. 8 days. 0's a crossover. This would have been 9 days. So let's look at the consumer staples. That happened 4 days ago. Just look over here and you'll see the crossover days. Dow Industrials 4 days ago, and so on down the list. Now, I just updated my files. I put the top 100 holdings in the indexes. These are the stocks that the institutions are buying. That crossed over 4 days ago. Here's the, see, this is why I expanded, because the crossover is actually right here. See that little touch of green right there? So these were the crossover days. So just looking at this view alone, if you only do this and look at these indexes, you can see which ones are crossing over. It's all right here in front of us. Now, what are the ones that crossed over just recently? Small caps 2 days ago. So they were the laggers. Healthcare is one of the weaker sectors. It crossed over 2 days ago also. But you can see volume is above average on all of these except for the Dow. But the Dow did cross over back here. My point is, this scorecard view tells us a lot. It gives you the advancers versus the decliners, and the percentage price change. If you want to go to advancers versus decliners for a different view, just go to number 3. It's all right here, and it tells you the percentage of advancers compared to the percentage of decliners for the day. Remember, I just rebuilt this, so this is current information. I'm going to go back to this one, and I want to look for the industries index. I'm going to go change to the index group, and this takes me down into the indexes. Now I want to, this is today. If I sort on the raw combo, it gives me the percentage price change. You can see that the healthcare facilities index crossed over today. Big gap up on one of the stocks in there. We can quickly find out what it was. Must be a buyout, CANO. So, well, a lot of these stocks are up for the day, but that really distorts everything. I want to go back here. What I want to find is marine shipping. I'm going to hit my space bar and type in marine and see if it'll go to it. So marine shipping index. I said it crossed over a long time ago. Well, it crossed over 9 days ago. But the VPOC, volume point of control, crossed over 21 days ago. So if I bring this up here, well, here, this is why I thought it crossed over long ago, because it did. And then there was a 1 day pullback. You can see this 3 barely pulled down through the 6, but it held on the 18 period exponential moving average, and the volume point of control stayed green the whole time. But a strong move here, and then a sharp pullback, and then it reversed again right here. Wow, that turned slightly green right there on that bar. And then it was off to the races again. But this group has had a tremendous run. Some of them, not all of them. Over a 21-day period, the group is up 11.3%. I'm going to go up here and sort on percentage price change 5 days. And that healthcare facilities will ignore that one. You can see home builders were really strong this week, up 16%. This is the 5 day. This is from Monday morning. I'm sorry, this is Monday morning. This is compared to Friday. Beginning of the week is Monday morning. 5 days is last week, and you can see the home builders were on a tear. Now, all of this shows up during the week if you look at these indexes. So you can see where the strength is. So if I go down into the industry group, Hovanian looks like it led the pack, 27.3, LGI, Beezer, all the familiar names. This is due to the perception that interest rates may start reversing. I mean, it's just a perception at this point. But look at this beaten down group. And here is where it turned up 3 days ago. 0, 1, 2, 3, 4 days ago. 3 days ago, it looks like. This is Friday, Thursday, Wednesday. I don't know why I said 4 days ago. It's 3 days. 0, 1, 2 would be 3 days ago. Now, these crossovers don't always work, but when the market is strong, when there is big movement, they will get you in stocks, or at least make you aware of them when they're starting to move. Yeah, it's work, but the information is all here. Now I'm going to go back, and what I want to do now is I'm going to go back up one more time, and I'm just going to quickly run through some of these indexes. Why don't we use the S&P 1500? And I'm going to go to my HGSI index charts, and you can see how the money has flowed into the S&P 1500. This is E distribution. It's come down. The A has crossed it. This is D and E is red, and A and B is green. You can see the money flow. This is just the rotation. You can see money coming into the market on the A's, the B's, and the C's, and coming out of the D's and the E's. This is all the S&P 1500. The Chaikin indicator, you can see it turned positive. This is a slow-moving indicator, but the pressure was coming off, and it turned positive. And these, the velocity, the AD accumulation distribution, and the velocity started turning up here as the market came up. The AD line has been going down. You can see how it reversed, which you would expect. Here's the information from today. 6.68 to 1 positive, 12.98.5 advancers, 294 decliners. And the date is 11/3, so this is current information from rebuilding after the market closed. This is a percentage of stocks above their 20, 30, 50, and 200-day moving averages, and you can see how this spiked up sharply as the market started moving up. Now, the buy-sell signals, sometimes they come in a little bit late, because what I'm looking for is 5 to 1 advancers over decliners. Minimum of 3 to 1, but I like to see 5 to 1, which is dark green. And then the same thing for advancing versus declining volume. The force index 13 and the force index 2 will generate a green bar down here. Now this is a little bit lighter here because while sometimes these VFBs or visual filter back tests don't give me the correct color, but it's a green. So right here was a confirming buy yesterday, and then a further move up today. This is the broader market. If you really want to see what's going on within the market, you go to those groups like I just showed you with home builders and marine shipping and so on. You're down at that level then, rather than waiting for the whole market to turn up. Just out of curiosity, let's go to the NASDAQ 100, and you can see that it fired a day before. Here's that effort to rise, and you can see the green bars up here. So when the index is narrower, 100 stocks compared to 1,500, it responds faster one way or the other. This is the same thing without the moving averages. 6A. This has the moving average. This one doesn't. Okay, here's the percent above the 50. Just a close-up look. You can see that a lot of stocks moved, or the percentages above the 50 moved up sharply. And here's your AD line. That's number 7. Here's number 8. Here's detailed information. Here's the percent above the 20, 73.9%, 66.6 above the 30, and so on. All the information is in here that you really need to analyze. Now you can see that the VPA trends have gone from down, down, down to short term is up. They don't change real quickly, but they do change. Okay, now here's force index 13 is on top, and here's the force index 2. So you can see the force index 2 actually went positive on this day, a day before the volume point of control did. So right here, if you look down here on this first green bar, it's today's close minus yesterday's close times today's volume. It turned positive there. And then the 13 didn't turn positive until this effort to rise. Okay, here's a McClellan oscillator. This low was higher than this low, and then this low was higher than this low, so you can see that there was some accumulation coming in to the market, and this window up here shows you the advancers versus decliners, a big spike up. And finally, this is just another chart that I put in a while back. It shows you how the trends have changed, and it shows you the accumulation distribution and the velocity and the velocity acceleration. So I want to go back here, see if I missed anything. You can see that there were no volume pocket pivots, just because when the rally started, I don't have any blue bars on these. When the rally started, there just wasn't that much volume. Let's go look at one more thing, and then I'm going to end this. No, not on the NASDAQ 100 either. I didn't get a blue bar like I did here. So it's been moving up sharply, but until recently, we just haven't seen massive volume, which would generate one of my volume pocket pivots. That's it for today. I just wanted to give you a chance to see how I look at the markets after the markets close using thinkorswim. Now, you may think that everything's gone too far. Well, that's not necessarily true. What I want you to do, I'm going to go to all securities, or this is a suggestion. Go next week or Monday, go into what I'm looking for is the folder number 5, the undercut and rally charts. And look for stocks where the 3 has not crossed the 6 yet. The VPOC may have crossed. Here's one that has not crossed yet. Let's go down here. I'm looking for 2. There it is. These stocks, using the undercut and rally, and I'll go into this more in depth in another video, but you can find stocks that have pulled back and have not yet participated in this. Now this one looks like it's setting up nicely. The earnings are, well, they were today, it looks like. So go in and check out this stock. Here's Lilly. You can see that the 3 is still below the 6. If you look down here, it tried to go, but it pulled back today. But if you look at these stocks, these have not broken out yet. Yeah, that's probably a buyout. Let's look at Earthstone Energy. You can see that it's still negative on the 3, and the VPOC is negative 2, but these are stocks that are not extended, and it's a good place to look. I'll go in to the undercut and rally scans. I probably won't do it this weekend, but I will do it at some time. So there are always opportunities. If you missed the opportunities this week, there's always something coming up. Thank you for listening. I'm going to end this now. Have a good weekend.